Right, thank you very much for attending this LCG special live coverage of non-farm payrolls. My name is Jasper Lawler. Basically, this is going to be hopefully a fairly open forum, so any questions you have at any stage, certainly feel free to fire them through to me. I'll do my best to answer. I've got a couple of slides prepared with a bit of information, and then I'll tell you which direction the market's going to go. Obviously not. I wish I could. I probably wouldn't be here talking to you if I did know that. Honestly, you know, economists put in their predictions for non-farm payrolls and mostly get it wrong. It's honestly getting the number right is a flip of the coin. So, you know, we just got to use the information that we have to kind of trade this as best as possible. So I'm trying to bring a bit of honesty to the table here. Let's get right to the numbers. So last month it was 222,000. That was ahead of expectations. I can't remember what the exact expectation was at the time. It was around 180 or so, and so we're kind of at that sort of region again. 183,000 we have on the LCG weekly calendar. So the kind of key date, well, I've highlighted a few things on the screen here, obviously. But mainly it's the non-farm payrolls, the average weekly, the average hourly earnings figure, and which I suppose the annual rate's important, but probably the monthly rate is what people kind of look at the most, and just the unemployment rate. So those three things together. Sometimes the labour force participation rate, you know, if you see the participation rate dropping, but the unemployment rate drops at the same time, it kind of takes a bit of an edge off the unemployment rate dropping. Interestingly, last time we actually saw a pickup in the unemployment rate for the first time in a while. So here is, yeah, this is a really good website, Trading Economics, if you haven't used it before. The unemployment rate. I think this is just good to kind of generally track what's the general direction here that we're looking at in terms of the US labor force. Generally it's improving. The unemployment rate is heading down. You know, it was at plus 10% after the financial crisis. You know, now we're at easily sub 5%. Obviously there's a fair bit of variation in non-farm payrolls, and I think this chart is useful from the perspective of what is a really weak number. So we've seen it drop down to 50. Keep in mind that this data is based on revisions. So that's the other thing about this unemployment data, is that yes, we have the number now. By the time it's been revised 2 times over the next couple of months, it could be a very different figure. So you've got to take this data for what it is. You know, it's more of a trading opportunity than a genuine insight into the US economy. But you can see that this 100 area, which I mentioned in the week ahead video, is generally a good kind of benchmark for what's a weak data point. And then when you're talking plus 200 is pretty good. When you're in the plus 250 region, you know, that's when we start getting to the kind of outliers. And you can see that recently we've struggled to get beyond that 250 area. So again, if we do see a number like that, you know, that's going to be, that headline number is probably going to outweigh everything else. But as I said before, it's not just the headline number in terms of jobs. It's also the average hourly earnings. And so that's important because at the moment the Fed's kind of tripping up a little bit on whether they should hike rates in September. People were about 50-50 on it. Now there's almost no expectation that the Fed hikes in September. Why? Because inflation's below target. Why is inflation below target? Multiple reasons, but one of them is that wages aren't really taking off. Wages, I mean, obviously there's a kind of small variation in what these figures can be, but I think you can say that normally a 0.1 is a disappointment, and a 0.3 is sort of to be expected. A 0.4 is a good result there. If we saw something like a sudden surprise 0.4, that would probably trump whatever the headline US unemployment report is. How does that work out in terms of the market movement? I think I can sort of explain that in slightly better detail on this next slide. So this is fairly sort of token gesture analysis, if you like, but this is something I really recommend all of you do, is don't just hazard a guess at what the market's doing. Go back and analyze the past price charts and see what happened last time. See what happened at the last time price crossed the moving average. See what last time happened when the RSI got overbought in an uptrend. Did it roll over? What happened at the last non-farm payrolls data report? Well, this is a 15-minute chart of dollar yen. I've chosen dollar yen. It's fairly arbitrary. It's just because dollar yen correlates quite well. Treasury yields can be quite responsive to the unemployment report. You know, especially with the euro dollar at the moment, the euro is the dominating factor there. So I'd almost say that when you're trying to play the dollar, maybe the dollar yen is a better one. But again, if you're a euro dollar trader, I'm not telling you what to trade, but I'm just giving you a little insight as to why I chose dollar yen. So this is the day. And so obviously we see that it was quite interesting that last month we had quite a nice little up move in the morning. We consolidated in the hours preceding the data release. Then what happened here? So this, as you can probably guess, is the 1:30 release. How are we doing here? We've got 4 minutes to go. Hopefully I can time this all right. This is, you can see here that what was the initial reaction? The initial reaction was down. So we came down, we took out probably, anyone who's buying in this area probably had their stops under this low here, came and spiked lower, took it out. We were against the prevailing trend of the day, and then we ended up just pushing higher, and we actually had a nice little up move in the rest of the day. So, you know, what can you take away from that? The initial, you know, don't be super confident about holding on to the trade based on the initial price move. You've got to be, if you're trading this, you've got to be pretty quick-fingered, because the market can suddenly flip directions. In fact, it often does. I'm about to show you the previous month's chart as well, and that's actually going to go slightly counter to that idea. But just be aware, I think the best lesson you can take from this is that you've got a better chance of your trade working out if you're trading with the prevailing trend. There's exceptions to that if we're at a big resistance level, but this, you know, there was a big push higher in the morning, and you know, the data obviously, I can't remember quite what flipped what, but sometimes you get a bit something on the earnings, bit something on the headline. It's not really sure. It's a bit of push and pull. The initial direction actually doesn't work out. Now, a completely counter example to that is the last but one's NFP reaction. Again, dollar yen, the 15-minute chart, where you can spot the candle, right? And this is why we're obviously attending today's webinar, is because you can get moves like this and obviously make a bunch of money, lose a bunch of money in a very quick amount of time. I should say from my own personal experience that my single greatest and worst losing trading days have both been non-farm payrolls. I won't give you the specific numbers involved, but it was certainly a bit of a tearjerker. I don't recommend really over-leveraging your account on any occasion, but especially not during a news release like this, because it is, as I said, you can take all the information I'm giving you here, the information you've accumulated yourself, and hopefully it comes together for the odds on your favor. But again, like any trade, the next trade always is kind of 50-50 in trading. It's about what happens over 10, 20 trades. So don't over leverage yourself on this one non-farm payrolls release. Even if you've got a bit of an edge on trading non-farm payrolls, it may not work this time. It may work over 10 times, not this particular one. But what can we learn here? Actually, there was a little pop in the morning, but it faded, and then we completely took out the lows of the day and completely went the other direction. So, you know, this was obviously, if you had a stop order below the previous low here, it went pretty well. If you had a stop below this low or even this low on this occasion, wouldn't have worked out so well for you unless you were very quick-fingered. If you did have a stop above these highs, which was maybe a more prominent resistance, actually, if you held on through this consolidation, it would have worked out quite well. Again, stop orders, you've got to be careful, but the market does move fast. So we're almost, what, a minute away now. So I'm going to switch to, I'm sure you guys have all got your own data source as well. I'm going to look at my data source here, and we'll wait for the numbers. I'll bring my chart on the screen just so we can see what's happening. What should we watch? We've been chatting dollar yen, haven't we? So let's just see the reaction there. We're obviously at the 110 level, which makes this very interesting. Have we had the data yet? No, we're still on 129. Let's go down to the hourly chart, shall we? Looks like we're trying to form a base here. Oh, look at that. We're flying off 110. We've got the Canada jobs numbers. Okay, so we're on Unemployment rate 4.3%. That's as expected. No, 4. Average earnings plus 0.3%, so that's with expectations. The payrolls 205, so obviously we've been, that's private. Non-farm payrolls was 209. 209, obviously the consensus was 180. So, you know, we talked about the plus 200 being a positive for the dollar. You know, that's obviously worked out here. Average earnings came in at that 0.3% as we, you know, as was the consensus. So it's the headline number that's done it here. So we've, you know, in terms of the short-term chart, we're on an hourly chart here. We've popped above the resistance. I hope some of you maybe had a little dig on the resistance there. We haven't spiked one way then the other. This has been a pretty one-directional move, but we could still head the other way. Is there anything to suggest we'll reverse here? It's not a massive beat, but again, we're at the 110 level. I would say it's a beat of the numbers, and we're at that solid 110 support on dollar yen. You know, what are we on the other charts? Let's have a look at some of the other reactions here. Euro dollar, obviously, we're falling off from basically the 119 level. We drop down to the hourly chart. We can see that we were struggling there at the, you know, we obviously spiked above 119, and then we had some basing out at the 118.90, and we've rolled over. It's counter the trend here, so this is interesting. You know, this is we've obviously had better than expected data. The dollar's improving here. We have been falling off in the dollar for a while now. You know, this might be an excuse for people to start ditching their dollar shorts. So we've got a situation here where we're at support in the euro. You know, and if you're brave, you can obviously start looking at supports to buy in with the overall trend. But to me, it sort of looks like maybe we've stalled here in the euro. Let's have a look at the pound. The pound had obviously had a bit of a precursor to this because we had the Bank of England meeting yesterday, and we rolled over big yesterday, and this is actually turning out to potentially be a bit of a bearish flag. So this is something to watch, guys. If we go down to the 15-minute chart, we might be able to see this better. This is fairly classic. If we roll up here, that's the drop. We've had the trend higher, and we dropped through again. If we hold below these lows, guys, we could see a continuation of this move. That's typically what you'll do. If it is a bearish flag, you'll see this pole on the other side of it. That could take us down to 130 and change. So potentially more to go on the pound here. You know, I'm still overall positive in the pound, as I said in my snapshot video, but I think we can weather the Bank of England. But maybe we're heading down to this, you know, these longer-term resistance levels, even at these old highs. So good excuse for the pound to get a bit lower into its support levels. Did you guys have any particular questions on anything? I can have a look at the indices. Obviously, I'm sure some of you would probably trading the Dow on this. So sometime, you know, back in the past, we've seen instances where actually positive data was bad for stock markets. But I think everyone sort of knows that the Fed is gradually raising rates at this point. So we're in a slightly different environment, and actually people are starting to take it in face value again that good data is good for the US economy, good for earnings growth. So I think maybe we did get a little negative reaction there, did we? Let's have a look at a bit more detail. Let's have a look on the 5-minute chart. The dollar popped higher. Yeah, so it's interesting. So we got that initial negative reaction in indices, but we basically came down to those previous peaks on the short-term charts, and we're rallying up there. It looks like we may even hit another record high in the Dow if we open in similar vein to this. So actually, this report was a good little buy the dip opportunity here in the Dow. See how we do at the highs. Any reaction to other indices? Yeah, we're popping off the lows in the DAX. The DAX has been based out around 12,100. So, guys, if any of you have been, if any of you are DAX traders, this might be a little bit of an impetus to see this basing pattern finish off. What do we need for a bit more confirmation here? Well, realistically, the base is kind of through this area, so we're not really out of the base yet. If you're a bit more aggressive, you could obviously have a trend line involved. Maybe through those highs, maybe through that high. Bit of sign that maybe 12,100 is doing it in the DAX. How's the NASDAQ faring? Obviously, we've been consolidating in the Nasdaq. I would, in terms of obviously Wall Street's massively at the highs here, and it's always difficult to buy the highs, but we've broken through it. We've got another record as we speak. So we're breaking into record territory. Breakout traders, it's good data. You're buying on solid data if you are buying the breakout. Let's see, is there any other information within this data that's worth kind of having a look at? The participation rate slightly lower, but it doesn't look like it's really hugely affected the unemployment rate or anything. The trade deficit, sometimes people can get worried about that, but actually the trade deficit came in a bit to 43.6 and the consensus was 44.1, so a bit below the consensus there. Anyone trading the CAD? We did have the CAD data out, which can kind of conflict against it a bit. How did we do in the Canada numbers? We had plus 10,000 over the forecast. So that's some pretty good numbers from Canada. Is that the case? So that's a little bit complicated. Normally what you want for a good trade on dollar CAD when both the numbers are coming out at the same time, obviously, is for one to miss and the other to do well. Hence we're seeing a bit of a kind of doji looking candlestick here. Worth pointing out there's a potential sort of double bottom forming here in the CAD after a big slide, but we're not quite there yet. Maybe a bit more confirmation. I wouldn't be surprised to see another dip down to 125 before this bottom plays out, if in fact it does. Well, so people still sitting on their positions. There's different ways of playing this market, obviously. We've had the initial positive reaction. Let's get back to the dollar again. How are we faring? We've made a little bit of gains beyond where we were looking just before. If we go back to the slideshow again, you can get a feeling as to where. Here's the sort of initial reaction. And obviously you get bounces off the lows like that, and you can get, people get worried, you can close out the trades. Obviously it could give all of it back. This was a very strong reaction that week. Obviously on this occasion we did completely, we probably held these levels for a few minutes before going back the other way. So you've got both those factors in mind. To me, this is not really a very conflicted report. Actually, I think they both, all the numbers are sort of positive or as expected. So it's not a blowout, but it's above 200,000. I think probably people will be mostly fairly comfortable with this. Slight pickup in earnings growth, probably not enough to really change whether we get a rate hike in September or not, just because it was 0.3% month over month instead of 0.2. Probably not a massive, not a massive factor for why this would lead to a really big dollar move. But again, if you think about the wider context of this, we've been looking at the kind of shorter term charts, but if we do pull out to the daily chart, had quite a sell-off in dollar yen. We've hit 110. Equally in the euro, obviously we've had a massive move higher. So it's been a really weak period for the dollar. So very very counter trend. No real evidence of a top yet in this euro chart, but one thing, if you're, maybe if you were just waiting to see what happened with the data, let's see how today closes, because actually yesterday was a sort of inside bar. If we close today lower below the inside bar, that would be actually maybe a little bit of a bearish candlestick pattern at the top of the dollar, the euro dollar chart. Equally, let's have a look at dollar yen. We had a bearish engulfing yesterday, but it paused at 110. We didn't get a close below it. If we get a solid reversal of a bearish engulfing pattern, when you have a bearish pattern, but then it just doesn't play out in the next candlestick or two, that actually becomes quite a strong positive signal, because people should be reacting to that bearish market move with more selling. But if they don't, actually it goes to show that maybe the sellers don't have control, and maybe we're flipping into an environment where buyers are taking control. I like to look at the RSI levels on here. Again, in dollar yen, it could be that on the daily chart we're flipping out of a kind of oversold area in around the 30 level, back above into a kind of reasonable recovery area plus 40. And obviously if we get above 50, then even we're possibly switching back gears into a positive trading environment. So something to look out for here. Maybe this is the beginnings of a basing in the dollar, and looks like it's generally been good news for stock markets. Oh, look at that. Well, for any of those, anyone who was trading that breakout, they're feeling a little nervous at the moment. We've given back those gains in the stock market. Guys, I'm going to leave it there. Thank you very much for attending today. This was it's great having you. I know it was short and sharp, but it was always fun to trade the non-farm payrolls. Good luck with trading for the remainder of the day if you do any more. And please catch me in the regular Monday webinar where I'll be covering most of these major markets you see on the screen, the currencies, commodities, and indices markets. Thank you, guys. Have a good weekend.